The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. Tommy O'Brien, Tom O'Brien. We do appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 189. We get the Nasdaq up 73. S&Ps are up 28. We have the gold contract down $9.30 at $13.15. Silver is up 5 cents at $17.79. You get the copper market up 5 pennies at sorry about this, $2.17 a pound, folks. Notes and bonds, folks, they just refuse to back off. You get the notes down 4 ticks, 133.04. Bonds down 12 ticks, 172.25. Now, the notes and the bonds, wide price spread, accelerated volume on the way up. They're pulling back with light volume. Rates are going down once again, folks. And good old King Dollar is down 500 ticks at 96.19. Tom O'Brien, what's going on?
What's going on? Good morning.
How you doing, man?
Doing good.
Another day, another nice volatility out here. Nice bounce across the globe.
Yeah, and you can expect bounces, right?
Yeah. There's no doubt. We got window dressing happening. We get the July 4th holiday happening. And guess what, folks? We have our man, Mr. Kevin Hinks, happening. And each and every trading day right here at TFNN, folks, at 12 to 1 Eastern Standard Time, TD Ameritrade, swim lessons. You can get it right on your cell phone, TFNN.com, hit Tiger TV, and you're going to get some great audio and video. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How's everybody doing? You hanging? Everyone's got their seatbelts on tight?
Oh, listen, man, I like this market. It's a nice two-way market, you know. Hey, Kevin, you know, and folks, if you've never listened, so check this out, okay? If you're in the West Coast right now, you're in your car, you're going to work, I know it's 6 o'clock or 7 o'clock in the morning, remember that you can get us right on your cell phone at TFNN.com. Kevin, Scott, Cindy, they do an amazing show, but I can tell you flat out, okay, I'm prejudiced to the show anyway because I think it's phenomenal education. But I heard something on that show last week, and there is no doubt Tigers and Tigers has heard it because I got plenty of feedback, that you hear zero, nowhere. Okay, so we had the downdraft happening, right? And then Kevin and Scott, they're going through how many margin calls are coming in at TD Ameritrade. Kevin, that was so cool, man. That was like just great information for everyone.
Yeah, you know, what it is, it's a couple of things, Tom. That works to, number one, show if it's heavy. And, you know, the numbers showed very light percentages.
Yeah.
It even lighter yesterday.
It blew my mind that, you know what's so cool about it? Okay, so picture this. We know that TD Ameritrade is one of the largest, or if not the largest, retail broker. But having that information, you know, depending on how long you've been trading, you can use that all different ways, but it's just great gleaming that information, right?
Right. And the other thing we tried to do, you try to demystify what a margin call really means.
Yes.
And how many days you have, and what happens on day one, what happens on day two, things like that. Well, you know, I talked to the margin department that morning, and the number one thing we talked about is, if I can give these people, you know, percentage, here's our normal numbers, here's where it is now.
Right.
And we can let people know the degree of the move and educate them and let them know that, hey, you know what? Everything, you know, this is pretty orderly. This is not a panic situation. This is not crazy. There's going to be margin call on a day like that, right?
Sure,
and we knew they were coming yesterday as well. You know, a lot of people were asking me, I go, let the margin calls go through, let the people get everything settled, and then it's a trade on again. So I think that's what you're seeing today.
No, and you know what's cool? So cool is that what I gleaned out of it is that you have a lot of traders that were not over their heads at all, not even,
right.
You know, which is really cool, folks. Okay, that's crucial because in trading, the key is to stay alive until you figure this thing out or try to figure it out. But
that's right. I mean, your number one goal when you open up that computer is at the end of the day be able to open it up again tomorrow
exactly
without a problem.
Yeah.
I mean, I got taught that very early in my career. Your goal when you leave that trading floor is to be able to go back down there the next day.
Right.
Yeah. And preserve capital. And there's some days you got the spigots on full and you're making money, and there's some days you got to just preserve capital.
Right, no doubt. So, what are we going to be talking about today?
We're going to, keep going our discussion. We're going to break down diagonal spreads and range-bound trades. Now, we're not in a range-bound trade right now, but we're going to, keep working on our fundamentals of range-bound trading, because guess what? In the next week or so, we could go right back into a summer trade, and we have to be ready for that. And that's what everyone should be looking. They should be looking 2 to 3 weeks in the future. Remember, you've got 4th of July coming up. That's going to be, no matter what, it may move a lot, but it's still going to be lighter volume and whippy as people take off.
Oh, big time, man. This is going to, this week here, folks, okay? Summer trading, Mondays and Fridays normally are pretty slow. This week, I think we get a good little bounce going here, but it's going to be thin extraordinaire on Friday, for sure.
Right.
Yeah.
And everyone's got to be ready for that.
Yes. Yeah, no doubt. The market-wise, though, the range that we have, Kevin, my take right now is that, we're going to probably work our way down to January and February lows, but that's quite a range, man. I mean, we talk about the S&P, you're talking about a large range. There's both sides of that. That's some good numbers, man.
Hey, if you're the last thing you expect when you go into a summer is to get a great movement and trade like this. So this is actually a blessing for some people, traders who like when it's ripping.
Seriously. Right here, folks, 12 o'clock. Kevin, thanks so much, man.
Have a good day, guys.
Have a great one. Have a safe one. Tommy and I are coming right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow up 197. You get the NASDAQ up 76. S&Ps are up 29. We have gold down 9. And, hopefully in the next couple of days, Tommy, you'll be able to get back in the studio with me.
You're sounding better for sure.
I do sound better. And I feel better, too.
Good.
So it's
that's important for sure.
Yeah, it's coming out. Summer colds are weird, man. They really, it's funny, yeah, hey.
Yeah.
It's going to kick it out, man.
They're kind of all summer colds in Florida, so.
Yeah, that's a fact. There's no doubt about that, man. No doubt about that. So, market-wise out here, if we take a look, folks, and you go overseas, I wouldn't be short in this market right now. This thing, what you have is this. You got a great downdraft, but right now you get the FTSE up 3%, the DAX is up 2.72. The cat's up 3.2. It might take. You're going to get a nice B to C of an ABC structure on the way down. And you can ride it up. It's a little bit harder if you're going to ride it up. I'd make sure that you put a stop right underneath it. I don't know if I'd carry this overnight myself. I wouldn't carry it overnight myself. I'll tell you that. But because the larger issue of these down the January and February swing lows. And if you want to see, it's kind of cool. Google, Tommy. Yep. We've been watching Google, and good old Google, that came right into the swing point and just didn't hit it. Now watch, maybe it did 663.28. No, it didn't. This is crazy. So picture this, folks. When Google came down, it did 663.28. Now picture this, that came down from 739 to go test this high volume swing low. But the low is actually 663.06. So now what you're doing is that Google is going to build some cause to go after it again. I suspect first we'll go to 688. It's at 678. But Google's going to give us quite a bit of information market-wise as to what these markets want to do, meaning do we go down and just test the lows of January, February, or in fact, do we blow those babies away? So,
yeah, and I think if you want the volatility to continue, then a bounce should be a good thing because
it's a great thing.
That's I mean, that's I woke up and I saw it this morning, and kind of in your head, it's like, well, that makes sense, or that's probably of course, like it can't. Well, not to say it can't, right? But because it could do anything, and that's why. Kind of it's refreshing almost that it's going up because then that means it could go down further again because at some point it's either just going to stop and do nothing or go up.
Exactly.
So it's good to see it go up as opposed to just sitting around after tanking for 2 days straight where maybe it could have just settled and everyone's trying to figure it out and then before you know it, it's almost July 4th. As opposed to now we have a big up day and it's like, oh, okay, well, now we have room to go down again.
Isn't that wicked, folks? Yeah. I know, man. I know. That's the perfect thought process, man. It's crazy. I know.
At least think about it that way. We're like, I would have been afraid to short it after it had gone down so much,
and
right?
You should be. And it should be, exactly.
And that's like everybody should be. Well, now there's room to short it again, so maybe they're selling. Maybe there's just it just opens up more opportunities of movement when there's movement up to go along with the big downs. It makes sense.
Yeah, there's no doubt, man. And what will happen here, folks, which is pretty cool, is that we're going to glean a huge amount of information from overseas. Because what I expect you're going to see in the European markets also is that you'll see those European markets do the same B to C of an ABC structure on the way down. And your confirmation on that is going to be, well, first off, your probability goes higher if, in fact, the bounce is on lighter volume. Then, of course, your confirmation is as we go back down, if, in fact, we go back down, is that you break apart with volume. So that's the way this baby looks like it's setting up at this particular point, though. The wild card here is going to be this. It's intriguing that gold and the dollar are still moving together. It's like, okay, man, one of you's got to break. We had gold up, dollar down, gold down slightly. What is going to be intriguing out here today, folks, is the the dollar did test its highs. And if, in fact, you come down tomorrow and you come down with some volume, that would be, well, actually, it didn't test its highs. Yeah, no, it didn't. Oh, hold on 1 second. I get the wrong contract up there. Let me just see this. DX. No, it didn't. It didn't. So bottom line is the dollar, that dollar's not done yet because that dollar's going down on light volume. So the dollar, that wants to get up to that 97 mark. You know, we'll see where that shakes out. Inside the commodities, folks, you know, we take a look at these commodities out here. You have, today you get natural gas. Look at natural gas catching a bid. Natural gas is up 3.4%. Crude's up 2.5. Copper's up 2.2. Sugar's up 1.9. Cotton's 1.6. You know, and in the context of talking commodities, folks, you know, with the market like we have, if you're in the CD market, go to the front page of TFNN. Everbank, you know, we talk about Everbank. We've had Chris on, you know, many times about these different, excuse me, folks, different CDs that they have. Well, they have a beauty right now, and it's the Market Safe Currency Comeback CD. What this is it has to be funded by July 14th. You have 5 different currencies. The currencies that we're talking about are the Australian dollar, the Canadian dollar, the Chilean peso, the Mexican peso, and the South African rand. And what happens with this is that you need $1,500 to open the account. Your principal is 100% protected. You have unlimited upside potential. It's FDIC insured. It's IRA eligible. The difference in this one, if you've been familiar with the other ones, is that I believe this doesn't reprice, Tommy, right? This goes out, just goes out 5 years. So
is there? I'm not sure. I think you're speaking to whether there's yearly pricing. Is that what you're
correct.
saying?
Yeah.
Okay, I'm not sure. I'll try and pull it up as we're discussing it.
Yeah. So I believe what the difference is, and that's, you know, it's actually pretty cool because right now these are all currency. These are all commodity currencies. That's what they are. And inside this low rate environment that we have, you know, well, you know, I'm a commodity bull. That's the real bottom line. We get free money, honey. You know, look at, I mean, it's just amazing, man. You know, the third.
And I think I did pull it up, and I think you are correct that it's just basically a 5 pricing where they take basically the point to point where I believe, and let's look at it exactly, where I believe the funding deadline is July 14th. So we're talking about just more than 2 weeks, and then basically a week out from that. So they know how much they're going to deal with. They know the funding value. They price everything in, and then I believe it's July 21st is going to be the initial value date of 2016, and then literally 5 years later to the date, July 21st, 2021. You know, that's the pricing that occurs.
And there's very few places, folks, that you can not lose principal and have principal guaranteed, not just lose it, have it guaranteed. By the FDIC.
It's pretty cool. I love these things. Yeah, I tell my friends about them. I told you, I mean, to have upside potential with 100% protection to your deposited principal in such a low interest rate environment is the big part, of course.
It is the big part. You stay right there. Tommy and I are coming right back, folks. Dow right now is up 182. You get the NASDAQ up for 73. S&Ps are up 27. We're going to be right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market safe currency comeback CD. This indexed and US dollar denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow right now up 177, Nasdaq's up 75, S&Ps are up 28. You had the, first quarter numbers came out. The world's largest economy, meaning our economy, expanded more than previously projected in the first quarter as improved performance in trade and business. Gross domestic product, the value of all goods and services, rose 1.1% at an annualized rate compared to a previous estimate of 0.8%. So it's going to be wild, Tom. The Fed, the market in general, is in quite a trip here. So you have the numbers going up, but yet the world is awash in low rates and lots of cash that is not getting put to work other than something that's really safe. So,
Yeah, I agree.
Yeah. The some of the higher volume stocks out here now, I expect you're going to have low volume all day long, folks. But these are the highest volume stocks in the marketplace. Now, if you're watching Target TV, as I bring this up, this is pretty wild. When you get a bounce going, every one of these stocks are green. That's really unusual. So you get Bank of America up 37 cents, Apple's up 82, Facebook's up 292, Wells Fargo's up 71. Let's go over to J.P. Morgan, because what we did have, see, these are setting up. So J.P. Morgan, folks, came down, monster volume. First day down on Friday, 44 million. Yesterday, 37. You're going to get a bounce out here, and I expect the bounce will be on probably 2022. And if that's what we get, what that whole lineup is the B to C of that potential ABC structure on the way down. And what does happen, which is pretty wild, is that when you have fast markets like we have, folks, if you've dealt with Fibonacci sequences, for some reason they seem to hit more on fast markets. Isn't that wild, Tommy? And it's almost like the market's out of control, but it's not. It's like
so much more movement going on too that the opportunity to be hitting those marks is more prevalent.
Yeah, that's a great point. Because the movement is huge. Yeah, there's no doubt. There's no doubt, man. Excuse me. So, let's go to oil for a second, because we're going to have the oil numbers tomorrow. Now, what oil did, oil caught a bid yesterday, folks, intraday. And right now, this is going to be pretty cool because all it's done, it looks to me like it's doing a B to a C of an ABC structure on the way down. Right now, you're at 47.38. I'd love to see this get up to like 48.85, somewhere in there. Because the difference is pretty dramatic. We came down, on like 649,000 contracts, and we're going up right now is 217,000.
Yeah, those volume numbers that day, I mean, really, for Friday and Monday are just going to be enormous, I imagine, for the foreseeable future.
Exactly. Now, the cool thing, folks, so watch how this goes, and this is where if you actually even take a look at, watch, I'll go over to Google for a second. We'll put this on a weekly, because this is where volume helps versus hinders on downdrafts also. So on the weekly basis, Google just went into a big week of 15 million. And the high of that, actually went into 15 million. So Google would have to get over 701. I don't expect we're going to do that. 674. Oh, I see what it did too, though. But this is what it also did. It went into the week of its huge strength, which it's going to do. This will be interesting. So, watch this one. Google, when it went topside, the week of July 17th of 2015.
Yes.
Google went from 532 to 674. We did 23 million shares. Now, it's already rejected the 674. We'll see if it's the end of the week. But if that's what you got, that's what sets up the bounce, because
sure,
it's going to be hard to get 22 million in Google. When you got that's 600.
And if I recall, that was an enormous news day, right? Where it jumped like.
Oh yeah.
550 to. Yeah, it jumped like 10-15% overnight.
Yes.
Something.
Yeah.
Or
it was
after
that,
hours, right? Is that the day I'm thinking about?
It was, yeah. They come out with numbers, and they just blew everything away. I mean, big time, too. And, now, if we go back over to Facebook now, Facebook is the number. Tommy, I read this article, and folks, I read this article yesterday. You know who's freaking out about Facebook now? So picture the largest advertising agencies. So,
okay, sure.
What has happened is picture, folks, large advertising agencies, absolutely, they work off spreadsheets, I could go on and on that how much they make on, just placing ads. But bottom line is that now what has happened is that Facebook is actually hitting the advertising agencies because people are realizing, their clients are realizing that you don't need the advertising agency to go start placing ads on Facebook. You know what I'm saying?
Yeah, definitely. I mean, I'm sure a lot of companies can just have their own chief marketing officer or something to that degree.
Exactly.
And I mean, we've seen it where we advertise on Facebook,
right?
And it's very user friendly, and they have a lot of analytics that you can drill down that we like, and specify who you want to reach and all that good stuff.
Right.
And I think if you're making money off of advertising revenue anywhere in the stream outside of Facebook on the internet, you should probably be worried, because Facebook, every dollar they get, is big money. And
I would agree.
But it's tough because we don't understand. I mean, I wonder how much money from advertising agencies right now gets used on Facebook.
A lot gets used.
Yeah, I'm just, to put it in perspective, that'd be interesting to break down.
What evidently is happening, what they want, the big advertising agency, what the big advertising agency want Facebook to do is make it more complicated. That's what was, is that they want an ecosystem.
So that they can add value, I'm sure.
Exactly. And folks, they make it very clean, so it's very easy to do. So they're gonna have a problem then.
I mean, to put it Yeah, just to put it in relatable terms, if anybody's ever just used Facebook, the reason why Facebook's so successful is because Facebook is just so user-friendly in itself. And I think they just did a good job of, realizing that the same exact thing had to be possible to start taking in epic amounts of money.
Right.
And that's what they did really well in terms of being able to be a user-friendly advertiser platform built right into Facebook.
Yeah, huge. And, even in this downdraft, like... Facebook, Facebook's going to take some heat too. But bottom line is that as an equity, this thing's laying up at highs, and it actually has volume, all the way up there to 112. So yeah, on a hit, can it go to $95? Yeah, but guess what? Yeah, as Duffy says, Facebook stole their cheese, and that cheese is billions and billions of dollars, man.
You control the internet, right? That's what happens.
Isn't that sick?
Yeah.
Stay right there, folks. Tommy and I are coming right back. Dow right now is up $163. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And don't forget, folks, Monday, Wednesday, Friday, right here at TFNN, we do live programming, 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, 7 in the morning to 6 in the afternoon. Get everything right on your cell phone, TFNN.com. Hit Tiger TV. You get great audio as well as video. Let's go over and take a look at this gold market. Okay, so XAU, HUI, well, we have, you're at highs. We're at 93.36 on the XAU. They're both ABC structures on the way up, confirmed ones. And what that means, folks, is that you've taken the B point out, taken it out with volume. We get sideways moving out here. They just won't back off. Bottom line is that it looks that they continue to want higher price. And if we go over the Gold Bugs Index, that's down 296. And I expect the Gold Bugs Index can get down to about 222. It looks to me like this thing will back off just a bit, but that's still an ABC structure on the way up, and they want higher price, man, which totally makes sense in the world of free money. Free money is just everywhere. Let's go take a look at the IWM. So the IWM, folks, that came off the highs, big numbers, 116 down to 108. You're bouncing with light volume. It's going to be a nice setup, man.
Yeah, it'll really be interesting to see how we come into the end of this week, right? We always talk about zero interest rate environment is something new that we're all trying to figure out.
Yes.
Now we have the Brexit. That's something new we're all trying to figure out.
Yeah.
And then we're just going to be coming into a long weekend where maybe the action's dry and it's light, like you're talking about, and maybe that just slowly fades into low volatility, but maybe it doesn't, right?
Yeah, no, I think it's going to, it'll crawl up with low volatility. Do you know what I mean? Just crawl up, get placated again, I mean, when you think about how the markets will
get complacent
before the Brexit vote, it's amazing, man. I mean, it's unbelievable,
That'll be a history lesson for sure in terms of not just, not Britain exiting at all, just how complacent the market was, how just unaware of basically the ability for that poll to go the other way, it seemed, how everybody was so far off for such a substantial vote.
Yeah, well, this morning, right when I was coming in, folks, okay, Tom Keene of Bloomberg was interviewing I don't know if he's a numbers guy, Tom, or he just writes books about it, all right?
Okay.
I forget the guy's name. So Keene was asking him that, okay, listen, you're a prediction guy, and how did this prediction go so wrong? And listen to the response, folks. It was pretty wild. He says, the prediction the night before the vote was 1 in 6. And he says, so if we were at a crap table and you throw a die and you say a prediction is 1 in 6, and it comes out, let's say the number is 6, okay? And let's say you throw it and it comes out 6. He says, okay, you got the number. He says, next time we throw it, we get 5. He says, well, you didn't get it. And so the guy says to him, he says, so it wasn't wrong. It was 1 in 6. It came out 1. Isn't that wild?
Yeah.
Which is correct. I understand that, but it's like wow. Okay.
So here's my take on why that's not like a perfect example.
Yeah.
Because they had the and so you're talking about like the wagering odds were 1 in 6, or where does that probability come from?
He didn't say that, but that's what I'm expecting. Okay, he didn't say that. He said that the night prior to it was 1 in 6.
Let's just imagine you make the same argument with the wagering odds, right? Let's say the wagering odds were like 1 in 6, and so you're saying, well, that's all right. That means there was just a 1 in 6 chance, and this time it came through.
Right.
Well, that doesn't necessarily hold true, because that doesn't mean just because the odds were there that the probability of this event occurring was a 1 out of 6. Do you see the difference? Like, I understand a 1 out of 6 coming true.
Right.
But I think that the probability was much higher, and people weren't accurately gauging the probability. That's a different thing, as opposed to saying they were just it's a close line as to they're both very related. And he makes a good point where, like, listen, that's what we talk about. Like, even 1 out of 6s, they come true all the time. And that's the point he was making, which is a great point. And I've talked about that with binaries that all the time, because out of the money binaries, you have to be aware that you're going to lose a lot. But guess what? You don't say the same thing when you get a 1 out of 6 where you're risking $1 to make 6. You're putting up like $15 to make 85. You're not shocked and horrified when that comes in the money, right? No. Well, that's about a 1 in a 6. So they happen all the time.
That's right.
But I think that the problem is that just from common sense, it wasn't like the day before the vote, there was, that everybody was sure that 70% wanted out and then they wanted in. Everybody changed their mind overnight. Like, this was something that was out there if you got enough information, I think. And that's the interesting part about how that wasn't able to be captured. And maybe just people weren't telling how they, we see it all the time, right, in elections, where when people get asked how they're going to vote, there's a number of factors that can change what somebody says versus what happens when they go in that booth. And so that comes into things, and it's all interesting. It is.
I think that's
what they'll be studying, I think. And
no, listen, I agree,
because
man.
that's where they that's where they, I think, screwed up on getting the accurate, because obviously if there was that much of a chance of the polls going that way, then if you actually got a correct representation of a big enough sample, you can gauge that. So that's where things went wrong, obviously.
Yeah, no, I absolutely agree. The aspect about whether people will tell you what they're really going to do in the type of environment we are right now is, you can throw that right out the window, folks, okay?
Right.
And I can tell you...
This is a perfect, a demonstration of that, Oh,
there's no doubt. I can tell you personally, if I get my views, even with some of my friends, they go out of their minds, and I like, oh no, here we go. I gotta go again. Do you know what I mean? That's real. Do you know what I mean? So it's like, okay, do you want to really have a conversation, or do we want to have a fight? What do we want? Do you know what I mean?
Sure. I think that's true across the board, not just yourself, in terms of how people...
It's just, so that was on the table, is on the table, in all of the above,
But here's what's so surprising, because that's true, but there's just so much riding on this that somebody, or, and I'm sure people did, realize, and the people who dug deep enough and understood the misconceptions going on and all that stuff, they made a bunch of money probably if they made the right investments or trades.
Yes. Shot in the pound was the number.
But for sure. I mean, if you saw that coming, yeah, without a doubt.
What's going to get interesting here too, folks, is that Angela Merkel she's playing the hard deal here.
Can you explain that? I don't know. She's playing
she's like our president in Germany.
Yes, right.
And she's telling the UK, no, there's not going to be any talks prior to you going, filing Article 50. Okay. That there's not going to be a negotiation. It's not going to be easy.
Okay. Okay. I just didn't know what. Yeah.
Yeah, and I think she's, we'll see what happens. They're going to have a hard time, period.
Maybe you can expand on that, on why you think she'd be saying that if she didn't feel that way.
Because she's a politician. Yeah, but I will.
But what would be her motivation? I just don't know why.
To change to have them change the vote. We'll talk about it as soon as we come back. You stay right there, folks. Come right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is up 172. You get the Nasdaq up 76. S&Ps are up 28, and we're talking Britain. We're talking Brexit. We're talking.
So I think my question was, right, that I was wondering is why would she be saying she was going to play hardball and not play hardball? As in, I think she might play hardball. You know, like why would she threaten it and not even plan to use it unless they bet like Britain?
Yeah, I agree. No, she's going to. Yeah, for sure.
Okay.
Yeah, which is
Okay.
pretty intense. Yeah, there's no doubt. There's that's what it looks like. You know, that's what it looks
Oh
like.
yeah, and I would think so. I mean, you got to be worried that if she gives them a sweetheart deal, that doesn't make any sense. If you're a member of the EU and you just like let Britain leave and why right?
That's
I mean,
right.
why?
No, I know. It's
Why?
yeah. This is gonna. You know what's wild, folks, is that I guess this whole thing started in '74, and we're 2016. By 2018, we'll see where it shakes out. And I get. Yeah, no, I know it's gonna be wild watching this whole thing shake out.
Yeah, I mean, and it's going to provide news in terms of market moving
my God.
news. Yeah, and it might be few and far in between, right? But there's going to be things that break when those negotiations start to fall apart. Who knows, right? And it might be months in between, but then there's going to be news of what's happening, either good or bad, that's going to drive markets without a doubt.
Yeah, and I think the euro, we'll see where the euro basically wants to go from this point. That we're at 110 right now. It's kind of the whole thing. In general, it's hard to wrap your head around it because it has to do where the hardball can come in, folks. The hardball has to do with the trade agreements between Britain and the rest of the countries over in Europe. That's where the big number is.
That would make sense, sure.
Yeah, that's where they can play hardball.
But you know what? And that's one of the tough things that people were saying against voting to leave is that, you're voting to leave all those countries. And so, you're making that choice to leave and then making the choice that you have to then basically leave them all and then say, hey, want to make a deal. So
right.
Don't, keep it in context. Like I would probably want to do the same thing if I was another member state and wanted the EU to exist. And here Britain is leaving and possibly creating weakness to have more people leave. It just makes perfect sense as to kind of making sure that there's not an incentive for anybody else to leave and that you do whatever you feel like in terms of if you felt Britain should have stayed. That's going to be a tough negotiation.
No, because why? There's no doubt. Because why would you get all the benefits of free trade?
Yeah.
They'll probably get it anyway, though. My take is
I don't know. I really don't. I mean, that's who knows, and I bet there's a lot more fundamentally. We'll have to see. Maybe we can get some good interviews on here or on your afternoon show.
Yeah.
Because the fundamental aspects and just like the process that this goes through, and that'll be interesting to see how that works.
I know, because I've always kind of tried to figure out like who are the winners when they're together, and then who are the losers. You know.
I think being in a world economy, my take was they were probably better together. But, and that's the tough part here is that, especially in Europe where their borders are so merged, so close.
I know.
Cutting yourself off and creating a wall where you need to make agreements with everybody to do business. I mean, just imagine TFNN from that perspective if we had to manage that. It doesn't take much to figure out it's a battle.
Oh, yeah, that would be insane. Yeah.
Right?
You stay right there, folks. Man, Mr. Basil Chapman's coming up next. And, of course, swim lessons, Steve Rhodes, Dave White, myself. And today we got Andy. Tommy, thanks so much, pal.
Love you, man.
Love you. You stay right there, folks. Basil's coming right up. Dow right now is up 150. You get the NASDAQ up 71. S&Ps are up 26. Basil's coming right up, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.